WeWork's struggles to go public, dominating headlines of late. But what could that mean for the broader commercial real estate market? Robert Frank is here with more on the story. Hi, Robert.
Hey, well, WeWork leases 7 million square feet of office space here in Manhattan, by far the largest anywhere in the world. And this building behind me near Union Square highlights the risk to the broader market. Now, it is partly owned by Adam Neumann, WeWork's founder. WeWork holds the lease. But this building is now for sale for $110 million, which will be a stretch given that Neumann and his partners bought the building for $70 million. In addition to that, they have a $78 million loan on the building. And this comes at a time with growing amounts of office space coming on the market here in Manhattan, where until now, WeWork was the renter at the highest prices. And we've got a growing number of developers who now say they will no longer lease their buildings to WeWork. And those who have high exposure to WeWork have pulled their buildings from the market. Now, in this building, WeWork has the lease until 2031. So the big question is, will a buyer take that much risk for a lease that goes till 2031, and at what price? Guys, back to you.
It's a key story, Robert. Thank you for bringing that to us, these ripple effects on real estate.
Guys.
For more on this and on WeWork, let's bring in Craig Deitelzweig, President and CEO of Marx Realty, who joins us here at Post 9. Craig, thanks for being here. Now, I realize your company has never actually leased to WeWork, right?
Right.
But how closely are you watching this and the impact it could have on commercial office space?
We're watching it very closely. I mean, WeWork does have about 7 million square feet. And WeWork has really been sort of a leader in the co-working environment. So it's not just WeWork, it's all the co-working tenants that we're watching carefully.
To what extent, though, has the kind of big breaking news of the last 3 or 4 months for the stock market, i.e. WeWork's IPO not coming good, already been priced into the real estate market, that the smart money across your industry kind of already knew that WeWork wasn't perhaps hitting the ball out of the ground as people were expecting it to with its IPO?
You know, I was thinking of Peggy Noonan's article, her op-ed in the Wall Street Journal, where it was titled "Everybody Knows," and she was talking about politics, but I think the same could be said about WeWork. And everybody knows that WeWork is not truly a technology company. Everybody knows that there's a disconnect, really, between the long-term leases that they sign and the short-term leases that they license out to their licensees.
Because we'd seen their debt prices already rise quite significantly before this IPO was pulled. So is that already priced into your market? Or do you think there is a big shock to come from WeWork's travails?
I don't think there's a big shock at all. In terms of New York, New York, it seems, has never been more vibrant in terms of the types of tenants that are coming to New York. So we're seeing a lot of technology tenants, financial tenants has always been the case, creative tenants. So, WeWork is just a small portion of this space.
But you sound like you are skeptical of some of the other flex office space operators and names like Convene, Notel, Industrious that are out there as well. Is that the case?
It is the case. So all these co-working spaces suffer from really the same issue. The durational inconsistency between the long-term leases and the short-term licenses. So that's really everywhere that we're seeing that. And then, also in terms of the spaces themselves, as a landlord, we really like to control who's in our tenants. And the short-term nature of these sublease licenses means that you can't really control who's in your space. So that's really a concern.
I could see why, as an owner, you would be hesitant to participate in that market. But has that type of activity caused mispricings out there? I mean, what actually affects other landlords who are not participating in that space that would really matter for the longer term?
Well, we are seeing cap rate differentials between those buildings that have a big exposure to WeWork and those that don't. So that's already been in the market, so there's nothing really new there. I mean, WeWork is just very much in the news, so that's just part of it. But the real story has been the story all along.
Quickly, is there too much office space online here in New York City right now?
No. In our buildings, we're finding that we've never been as busy as we are now. However, these smart landlords are really learning from WeWork and creating communities in their buildings, and that's really attracting a lot of tenants.
Thanks so much for joining us here today, Craig.
Appreciate it.